Yeah, cool guys. Yeah, now we are on. Now we are actually live on YouTube. So yeah. So if you so if you're finding it difficult to join Zoom, please kindly use YouTube. If you're finding it difficult, please confirm that you can see my screen. Y for yes. No, you can't. Yeah, guys, please confirm that you can hear me properly as well as see my screen. You can hear me as well as see my screen. You can hear me as well as see my screen, right? Yes, fine. Let's start, guys. Let's start. I'm gonna. Yes, fine. Let's start, guys. So this is your Louis from Nicespeed speaking. I want to say thank you, guys, for the support that you've given us. Thank you so much. I want to take this time to recognize everyone who is in the VIP group who have joined this meeting, everyone who is in the mentorship VIP group who have joined this meeting. Thank you so much for the support. Thank you for each and everyone who is a subscriber to our YouTube channel. If you're not, please click on that subscribe button and turn the notifications on, because we release educational content every now and every again. So with that being said, let's start. So we all know that when we are trading volatility index, let me start by giving you guys a whiteboard. When we are trading volatility index, we all know that we are looking for the W or the M. This is it, guys. This is it. We are always looking for the W or the M, right? We all know that. But how many times have we encountered situations whereby the W does this, then it goes all the way down, or the M does this, then it goes up all the way down, all the way, right? And imagine sometimes your sell is right here, right? Or maybe your buy is right here. Then what happens in the end? Stop loss get hit somewhere along the road. Stop loss gets hit somewhere along the road, right? And if you have a buy and your stop loss somewhere here and it gets hit, right? And you have to lose all the blues that you were seeing when it's kind of bought for a while, which was a fake move, then starts dropping, or all the blues that you had seen, then you end up losing a part of your capital. Sometimes you push the stop loss too early, then you end up not making anything in the expense of actually making, because whenever you take a decision to either buy or to either sell, the idea is to make profit. So we want to go deep with these M and these W formations, right? We want to go deep. So I'm going to quickly quickly explain so that we move on to the first thing. Right. So I want to quickly explain the concept of M and W. So the first thing I want to show you guys my chart. The first thing I want to show you guys is my chart. Yeah. Let's look at my chart, guys. Let's look at my chart. Let's look at my chart. On my chart, I have on my chart I have three things on my chart. First of all, I have the candles, right? I have the candles, right, which is actually the price action, right? Then I have two indicators, right? Number one is this one below here, the so-called TDI, which stands for Traders Dynamic Index. Number two, I have my favorite moving averages, right? This moving average here is the 13. This one is the 50. This one is the 200. And this one right here is the 800 moving average, right? These are just moving averages, right? For now, they're just moving averages. And this one here is the what? The TDI, right? If I have to tell you that I took a buy here, there should be reasons why I actually took a buy. Of course, yes, it's because there was a W formation, the so-called double bottom, and your buy is somewhere here. But we want to go deeper. How do you buy? How do you profit from this one? Why are we buying the W? Why is it a double top? Right? Why doesn't it do this? Or what if it does this? Right? That's what we want to go into most today. So let's face it, guys. Let's face it. Let's look at my chart once again. Let's look at my chart. I do have the candles, right? I do have the candles. I do have the TDI, and I do have the moving averages. I do have the moving averages. So we want to look at where exactly where exactly do we take a buy? Thank you. Where exactly do we take a buy? If we are to sell, for example, in this scenario here, was it wise for us to place a sell here? Was it wise for us to place a sell here? Right. That is what we want to look at. So first of all, I'm going to touch the most important aspect, which is the TDI indicator. This one, which is the TDI indicator, the most important aspect, which is the TDI indicator. Let's look at the TDI indicator right here. Let's look at the TDI indicator. I simply zoomed in the TDI. In the TDI indicator, I do have two important things, two crucial and very important aspects in the TDI. Number one, this blue line here, this one, which is the RSI, okay? It's the RSI, this blue line right here. Then number two, I do have this one, which is the MBL, which stands for Market Baseline. RSI simply stands for Relative Strength Index. We know this from the basics of Forex. This one, the solid line, which is normally in the middle of these two volatility bands, this one is called the Market Baseline. It simply gives you the overall market direction. It's called the Market Baseline. Then this red one right here is called the signal line, though I don't use it. I'm not saying it doesn't work. I don't use it. I personally don't use it because it doesn't do, it's not so much effective to me. Then lastly, I have these kind of Bollinger Bands. These ones are called volatility bands. They represent volatility. So whenever they are close to each other like this, it means there is less volatility in the price action. Whenever they are far from each other, like this, it means there is high volatility in the price action. Did we understand that? As far as the TDI is concerned, only the TDI. Did we understand that as far as the TDI is concerned? In the chat, Y for yes, N for no. Yeah. Yeah. Forgive my voice, guys. I'm not feeling well. Yeah. So if we say that we have understood this, let's continue. So the most important aspect of what we are looking at is the W formation of W, and formation of the M, right? So on the TDI, the first thing I want to talk about, I'm not going to talk about the W because you know that W simply means the price is bounced twice below. If I'm talking about the M, it means price is bounced twice upwards. So I'm not going to talk about the W and the M. Rather, I'm going to talk about the most important aspects of it, right? So on the TDI, let me remove these things. Right. On the TDI, let's look at price giving me in W right here. Price is giving me a W, but price did this, right? Giving me a lower low. If this is a low, then this is a what? A lower low. Agreed? This is what I see here. I have this low here and I have this lower low. Now, let's look at the TDI. TDI actually gave me this, another W, but this is a low, but this is rather a higher low. Can we see that, guys? Can we see that? So the fact that on the price, I have a lower low right here, and on the indicator, I have a higher low right here. I'm saying this is a higher low, right? A higher low. I have a lower than a higher low. It means TDI and price action are doing the opposite. TDI is giving me lower low. Price action is giving me higher high. So this is what I call divergence. Write it down. Divergence. I call this divergence. This is what I call divergence. Just a minute for you guys to write it down. So whenever TDI is going up and price is going down, I call it divergence. If these two are doing two different things, I call that divergence. We're gonna look at more examples. So divergence is a powerful reversal sign. Remember, if you're trading M and W, you are actually trading reversal. You are trading reversal, means to say trend has been going down all along, but because you saw information, you are now looking at reversing, right? You are now looking at reversing. Trade has been coming up all along, but because you saw an M, right? It means you are now looking at what? At going down. You are trading what? Reversal. So in this case, I have price going down, right? Goes up, goes down all the way. So because I saw this W, I'm now looking at going up, right? So how do I know? By this indication here, which is called divergence. Whenever this happens, it means powerful reversal sign, guys. This is a very powerful reversal sign. I call it the TDI divergence. If you have been following my flashcards in the free group, if you have been following, on number 3, most of the times I say divergence, TDI divergence. I say this most of the times in the flashcards if you've been following. So this is number 1 reversal sign, which is the divergence. It simply means price action and TDI are doing two opposite things. Agreed, guys? Did we understand that part crystal clear? I'm in the chat. Why for yes and for no? Agreed, right? Cool. Right, let's go to the next slide. If you have any questions, please write them down. If you have any questions, write them down. I'm going to leave time for questions. Right. So this is the kind of market that you should never touch. This is the kind of market that you should never, ever approach. Don't try to buy here. Don't try to sell here so that you buy here again and you sell here. Then you buy here when it comes here, then you sell here. Then you buy again when it's here, then you sell it. Never, 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 never. I understand this actually looks good on your phone. I understand this looks good on your phone, but how do you see that this is the kind of a market that I need to avoid? Whenever the volatility bands on our TDI, they are so close to each other for a very long duration, it means that there is no volatility in the market, there is no much movement, and the market is choppy. And choppy market is the last thing that you want to look at. So I just chose to give you guys a warning before we can continue. I understand there is a W here. I understand there is another W right here. And I understand there is a W right here, but this is not something that actually interests you. Remember, this is not a volatility 75 strategy or a VIX 10 or a step index strategy. This is a strategy that applies to all volatility and boom and crash indices. Are we together, guys? Yes, we are, right? Right. If you have any questions, please write them down. Then I'm going to leave time for questions. So this is the kind of a market that you want to avoid at any cost. Don't touch it. Whenever it's like this, don't touch it. Don't touch it. Don't touch it. I repeat, don't touch it. Right. Let's go to the next thing. Right. Now, look at this chart properly. Look at this chart properly. If you've been following my classes, I'm sure you've seen this somewhere. If you've been following in the free group, especially, if you've been following, I'm sure you have seen this chart somewhere. Right. I just gave you guys 2 minutes to look at this chart. Where is the M and where is the W of this chart? No M. If there is one, we may be talking of this, but there is this W formation right here. There's something special about this that, as I said, I'm not going to be introducing you guys to W's and M's. If you have no idea of the W's and the M formations, you have to visit the very first YouTube video, the very first one. But then today I'm going deeper with these W's and M's. So this is actually a W, but there's something special about this W. It's a W with 3 legs like this. It looks something like a head and shoulder, like a W. It looks something like a head and shoulder, like a W, right? So a W with 3 legs, how do you confirm it? Remember on my chart, I have the TDI and I have my candles, which represent price action. So W with 3 legs. For the first leg, the RSI must be outside of the volatility bands. The RSI, which is the blue line, must be outside of the volatility bands. The next leg, for the second leg of the W, I use red. The next leg will be inside the volatility band. And for the third leg, the RSI will be bouncing on the market baseline. Guys, that's very important. That is very important. Pay attention to this. I'm saying if we have a W, right? Let me create it with 3 legs. Which looks like a head and shoulder or something like that, right? If we have a W with 3 legs like this, for the TDI, how does the TDI actually looks like? Number 1, on the TDI, we have the RSI outside of the volatility bands. We call that shark fin. Whenever the RSI goes out of the volatility bands, we call that shark fin. If you have been following the flashcards in the free group, you have seen this word in my flashcard, shark fin. So shark fin simply means the RSI has left the volatility bands like this. So the first leg of the triple bottom or a W with 3 legs, we need a shark fin. For the second leg, it may be in the volatility band, but for the third leg, it has to bounce on the market baseline, this market baseline right here. Did we understand that? A Y for yes and an N for no. I'm in the chat. No. Right. I'm saying It's because the first answer I saw was a no, so I chose to repeat. If we have a triple leg or a W with 3 legs, a W with 3 legs simply looks like this, guys. Drop up, then instead of going up, it comes back again for the second time. So it simply means how must the TDI on this W looks like. For this first leg, we have first leg, second leg, third leg. For this first leg right here, it must be outside of the volatility bands. I call that sharp fin. So whenever this RSI right here, it must be outside of the volatility bands. The second leg must be inside the volatility bands. The third leg must bounce on top of the market baseline. It must bounce on top of the market baseline. The third leg, this is where we actually have our entry. And I'm going to talk in the last thing, how we actually take entries, because yeah, I'm going to talk about it. Did we understand that? Now we did, right? Now we did. It's clear, right? I'm just talking about a W with 3 legs only, nothing more, nothing less. It's just a W with 3 legs, nothing much, nothing less. If you're broadcasting on YouTube and you have a question, we're gonna visit. If I have a co-host, please, you will pay attention to the YouTube questions. Yeah. Next slide, guys. So I was talking about this W here. Before I can continue, let me just quickly run down to this. I was talking about this kind of a W. So here I have my W with 3 legs. This is how the TDI must look like. Right? This is how, and our entry will be somewhere here, somewhere right here. This is where we enter. I'm going to say, why is the entry here and why not here? I don't want entries that are here on a small time frame. This is just 15 minutes. So there's no need for me to struggle for sniper entry on a 15-minute. I would rather want a sniper entry on an H4. Yes. Right. So we're gonna go deeper into it, then we can see how we can assist each other on entries and etc. Right. Now, the next slide talks about the other kind of a W. Oh, yeah. So before I go to the next slide, I want to show you guys something quickly. Guys, these are quick tips, guys. These are quick tips that can help you out to trade. Then I'll go deeper on how we can actually apply it. I'll go deeper. Let me do this. Let me give you guys a whiteboard. Actually, the whiteboard. Right. I have the first type of W, which looks like this, right? Then the second type of W, which may look like this, regular W, right? Then the next type of W, which may look like this. The only difference between these is this leg here is higher than this one. Then only the special part of this one is this leg are in the same zone, and this one is actually lower than this one. The same applies with the M. So I may have an M like this, I may have an M like this, and I may have an M like this. It simply means that this M gave me a lower high. This one is a regular M, we call this regular. This one gave me a higher high, right? Do we agree with these guys? Agreed, right? I'm just talking about the types of W's. Guys, I don't have COVID. I don't have COVID. Yeah, we clearly understand. Please say, is the session recorded for some of us facing? Yeah, if you're facing any network issues, the session is being recorded and it's going to be on YouTube. Yeah, join on YouTube if you're facing difficulties. Right, let's continue. So these are the kinds of W, the 3 types of W, right? The only exception W is the head and shoulder, right? The head and shoulder type, whereby a W may have 3 legs or an M may have 3 legs. This is the only exception. Otherwise, for effect, they look either type number 1, type number 2, or type number 3, doesn't matter in which order you put them. So let's go back into the charts, then I show you guys what I wanted to share. Let's jump quickly into the charts. Like this, guys. So where must the W be? Where must it be? Where must it be located? It's not any W that you trade, guys. It's not any W that you trade. It's not, I repeat, it's not any W that you trade. But you trade a specific W that should be at a specific point that allows the market to reverse. Write this down. You only trade a W or an M that is at a certain point on a chart. That point must be a point of liquidity that allows price to reverse. Point of liquidity simply means whenever price gets there, it will reverse. For example, let's talk about support and resistance. Let's talk about support and resistance. I'm gonna do my support right here. Then I'm gonna do my resistance right here. So this is price, right? So this is actually a point of liquidity. This is a point of liquidity. Why? Because when price gets here, it's gonna reverse. This is a point of liquidity because when price gets here, it's gonna reverse. So what are we expecting? We're expecting that if it breaks, right, it's gonna come back to test. Why does it test? It's collecting some liquidity in the market so that it drops, right? Some volume. Right? Liquidity simply means volume. So those are points of liquidity. So your W must happen at a point of liquidity. When I say point of liquidity, in my case, in my style of trading, I'm not talking about support and resistance. No, no, no. I'm not talking about support and resistance. I'm actually talking about natural points of liquidity in which big institutions take trades, in which big institutions take trade. I'm talking about banks. You know, guys, you know very well that the market is highly manipulated and it actually moves in favor of the large institutions because they are actually the liquidity providers. So if the W has to happen, it has to happen at a point of liquidity so that we move along with the dealer. So the point of liquidity that I want you guys to write down, points of liquidity. Point number 1 of liquidity, write LOD, which means yesterday, low of day, right? HOD, which means high of day. Write that down. Low of the day. Write that down, guys. Write that down. High of day, like this, guys. Then these are the 2 points of liquidity, very powerful. You can also put last week high and last week low. Then I have the last one, which is the OTE series, right? The OTE, which means optimum trade entry. Optimum trade. I'm not going to talk about this right here now, so don't worry about it. And it's very rare to get these optimum trade entry setups. It's very rare, but yeah, you need high experience to get this. Right? You need powerful experience to get this. So the optimum trade entry. Now, right. So I'm saying the points of liquidity are either the low of the day, the high of the day, the last week high, last week low, or the optimum trade entry. These may also happen. These W's have to happen at one of these points. They may either happen at low of the day and low and high of the day. They may either happen at low of the week, at last week high or at last week low. They may also happen or may happen at optimum trade entry. Forget optimum trade entry for now. Let it go, let it go. It's not important. But now, let's talk about low of the day and low and high of the day. When we say low of the day, we are actually talking about yesterday low and yesterday high. Yesterday low and yesterday high. That's why we are saying last week high and last week low. So the W has to happen at yesterday low or yesterday high, or at last week low or last week high. Simple, guys. Simple and straightforward. I'm sure people, no, guys, please don't write on the screen. It actually writes on everyone. Don't write on the screen. Thank you. So let's continue. Look at this setup here. Perfect setup. Perfect setup. Perfect setup. So what do I see here? I see a drop, rise, drop, right? Then all the way up. Am I convinced to take a buy for this trade? Yes. Why? Because the W happens below low of yesterday. This is LOD. This little dotted line here represents low of D. Why LOD on this one? Because it's the lowest point of yesterday, right? It's the lowest point of yesterday. What you simply do is you're drawing a line on the lowest point of yesterday. In my case, it's this dotted line here. Then I see W playing at the low of yesterday. So I'm convinced that if I take a buy, I'll go up, considering that the TDI told me something. Either I have a shark fin or divergence. Either I have a shark fin or divergence. In this case, why am I buying? If I am to buy, I have my W at low of the day. Then TDI is telling me this. It's giving me lower low right here, and it's giving me higher high right there. Lower low, higher high, and W at low of the day. So I'm looking at buying all the way up, guys, all the way up, all the way up. I'm looking at buying. Did we understand that? Yes, no. Y for yes, N for no. Yeah. If you didn't understand, we will make sure that we try by all means to cover, to repeat each and everything that we say. Right. Now, let's continue. Right here, let's look at this setup here. Let's look at this setup. Let's look at this setup. I have an M formation. An M formation. I'm going to talk about an M that has its leg on the other day and the next leg on the following day. Right. I'm going to talk about that kind of an M. So I have an M all the way. M all the way. Right. A regular M where it's high of the day. This dotted line here represents high of the day. Which day? The previous day. Right. The yesterday. If this day here was on a Tuesday, and I'm saying a high of the day, which high? Monday high, right? So I have an M pattern playing at Monday high. And TDI, is TDI saying anything? If TDI is saying something, it's actually an added advantage. So let's check. I have lower low right here. Do I have higher high right there? No, I don't have. No, I don't have. But TDI has a low to tell me. TDI has a low to tell me. If I cover TDI, it means I may need another complete lesson for that. Right. But then now I have my M playing at high of day. High of day. Look at the multi-day M, right? The multi-day M. I said I'll tell you when the M first leg is on another day, then the second leg is on another day. I'll tell you about this. This is simple, guys. This is V100 on 15-minute chart. This applies to all time frame, guys. Point of liquidity remains the point of liquidity. Right. Let's go on to the next. So am I looking to sell this? Is this a powerful sell for me? Yes, it is, because price went all the way up, created a high, dropped, then tested that high to collect some liquidity all the way there, collected a lot of liquidity, price said a low liquidity. Then if I take a sell here, I'm so sure that I am looking at collecting some profit. I'm going to talk about where is stop loss, where is entry, where is stop loss, where is take profit. I'm going to talk about that. Did we understand that for this slide? Yeah, let's continue. Crystal clear, right? This is very simple and straightforward, guys. This is really simple and straightforward. Let's, right. This setup here, for this setup, is this a perfect entry for me to take a buy? Right. Is this a perfect entry for me to take a buy? Guys, I'm only looking at W's and M's. I'm not looking at other things, right? Like support, resistance, etc. I'm not looking at that. I'm only looking at this W. So is this a safe W for me to trade? That's my first question. When I see a W for me, is this a safe W for me to trade? And my answer is it a yes? Is it a no? Let's pay attention to this W. I have a W. Where is my W? That's the first question. Where is my W? At. Let me look at points of liquidity. I have low of yesterday. You see this dotted line here represents low of yesterday. This dotted line represents low of yesterday. So I can take a buy here. Now let's look at the TDI indicator. Does it have any confluence for me to take a buy? Let's look at the TDI indicator. Yes, it does, because price is creating a lower low right here, and TDI is giving me a higher high. Powerful reversal sign, very strong reversal. So I have TDI divergence, and I have the pattern, the W pattern below the lows of yesterday. So if I take a buy, right, if I am to take a buy, I'm guaranteed that it's going up, right? And as far as it goes up and up and up, you also have to pay attention to the higher time frame. The trend in the higher time frame must be an uptrend. The trend in the downtrend the trend in the higher time frame must be in a downtrend. It makes more sense. It makes more sense, right? So that you know that I'm actually taking a buy in an uptrend. I'm actually taking a sell in a downtrend, right? If I look at this, just a minute. Right. If I look at this M here, is this a safe M for me to trade? Here, I don't have TDI confluence. And to make matters worse, I don't see any point of liquidity. This is not at yesterday low. This is not at yesterday high. If I take a sell here, I might get some profit, but it is beyond my style of trading. So I'm not going to take this sell here. I'm rather waiting for a good, I'll rather wait for a good setup like this one, whereby the W is actually at low of yesterday, because remember, we buy low and we sell high, right? At low of yesterday, then I'm looking to go up. I only sell at low of yesterday. I only buy at low of day. I only sell at high of day, period. That's it, guys. I only buy at low of day. I only sell at high of day, period. That's it, right? If the price doesn't do this, then I won't take trade, right? Right, let's continue. Oh, in fact, did we understand that before we can go? Don't worry about how to get the indicator, the TDI, what. I'm going to send that in the group, in all groups. I'm going to forward that to the free group. Right, so let's continue. I want to clear this, right, like this. Cool, guys. Right, if we say that we've understood this, let's continue. If we have any questions, write them down. Then I'm gonna visit all the questions. Then we look at them one by one. Right. So now I'm gonna talk about where exactly do you take your trade. So I'm gonna take you guys to my live chat. I'm taking you guys to my live chat. Confirm that you can see MT5 on my screen, live chat, volatility 75, blah, 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 blah. Right. Cool, guys. Cool, guys. That's so cool. That's so cool. Right. Now, let us look at volatility 75 on M15 chart. Pardon that, guys. Let's look at VIX 75. Let's look at VIX 75, right? I'm looking for any M or any W. That's why I'm just scrolling. VIX 75 actually is this awkward, weird behavior. Right. Cool, guys. This is it, guys. This is it. Nah, I don't want that. No, let me go to VIX 25, my VIX 25 1S. This one. Right. Let us look at this W here. Let's assume that this W here was actually at OTE, right? It was actually at optimum trade. I said, do not worry about OTE. We will cover that some other time. We'll really cover that some other time. Low of day and high of day is enough for you guys to make good money with it. Right. Now, let's look at this perfect W here. Right. If we look at this perfect W here, where is my buy? Because you cannot just see a candle going down, then you place a buy here blindly. You blindly take a buy here. This is what I call lucky, right? You are a gambler if you're just buying here for the sake of buying, because this is not technical. It's not technical. So when do you actually buy? You are looking at what kind of W do I have? Is it a W that's giving me a higher high or a lower high? So what are you looking for? You know that in a W scenario, in a W, you have a drop, then a rise, then a drop, then a rise. I'm giving you guys very simple tips, guys. Very simple tips. Very simple tips, guys. Right. You know that for a drop, this may be a what? Bearish candle. Bearish candles, actually. In the chart, I hear that. Wait, guys, wait. I'm gonna go back to the questions. Right. We have a drop, bearish candle, bullish candle, bearish candle. Then, so I'm simply, for this drop here, right? For this drop here, I am simply looking for the last bullish candle that actually caused this drop here. The last bullish candle that actually caused this drop. So if that bullish candle is somewhere here, right? When price comes to break that zone, I'm buying. As soon as price closes above that zone, I'm buying, right here. This is where I'm buying. This is where I'm buying. Let me show you guys this on a live chat. I know it's difficult to understand this. Drop, bearish candle, rise, bullish candle, drop, right? So I'm looking for the last bullish candle responsible for this drop, right? This one. This is the bullish candle before the drop. I'm looking for the last bullish candle before the next drop. For this bullish candle here, before the next drop, as long as price come back to break that zone like this, I'm buying. This is what I call LSB plus its retest. This is what I call LSB. If you've been following the flashcard, you've seen the term LSB. Right? This is what I call LSB. So as soon as price breaks, I'm buying. I buy, I go up with it. And where is my profit? My take profit? I'm looking to take profit at high of the day, right here. This red line here actually represents HOD, high of the day, right here. So this is where I'm looking to take profit. And where is my stop loss? The lowest point of the W, right here. The lowest point of the W. So if I'm risking, this is the very cool risk and reward. I'm only willing to lose this, but if I'm winning, I'm willing to win all of this. You see how nice this risk and reward ratio is. You see how nice this risk and reward ratio is. This is how wonderful it is. Right. Let's look at another setup, V10. I'm just going to go to 15 minutes of it. Let me remove this. You won't understand this one for now. Doesn't want to go. So look at it, guys. Look at it. Let me zoom in the charts. Right. Let's look at this W here. Right. Let's look at this W. I'm saying let us consider that this W is on low of the day. Right. It's on low of the day. And already TDI already has given us what our favorite thing, right, which is divergence. Right. We already have divergence. Price giving higher high. Price giving lower low. Indicator giving higher high. So this is a powerful reversal sign we already have from the TDI. Now we are looking at where do we trade. So for this drop here, I'm looking for the last bullish candle right here. Whenever price breaks that zone, whenever price breaks that zone of the last bullish candle, I'm willing to buy here. Then I'm making profit, right? I'm making profit, I'm banking. If I have to win this, it wasn't a large movement, came back to retest the zone, went up again, right? All the way, right? Then it drastically dropped. If it was losing, it was just gonna lose this, but considering that you are winning, you're gonna win all of this. It didn't hit the TP because I said the TP is what is the high of yesterday, right here. So it didn't hit the TP. So these are those trades that mostly hit our stop loss at break even or at entry point. It happens, guys. It happens. You have to understand that it happens. Okay. Let's look at the last scenario that I just want to look at. Information. I can't seem to find any. What's dropping these days? Step index is dropping. Step index on my watch list, right? Step index is dropping this. No, it's actually rising these days. Yeah, it's dropped. Right. Let's look at this M here. Where is this M? Right. This M is somewhere close to where? To the high of yesterday. Somewhere right here, close to that zone, right? And what kind of an M do I have? I have a regular M, right? So I am looking to sell this setup. Do I have any TDI confluence? Yes, I do. What do I have? I have divergence, where I see price giving me lower low right here, and I see price giving me some kind of a what? A higher high right here. Let me do it properly, like this, guys. 1 pip high is high, guys. 1 pip high is actually higher, like this, guys. So I have TDI divergence. So where am I looking to take a sell here? For this rise here, I'm looking for the last bearish candle right here. I'm looking for this last bearish candle right here. When price breaks that, I'm looking to sell. I sell the market all the way, guys. And where is my profit? My target profit number 1 is that low of the day right here. So TP was what? Was hit with surplus, a little bit of extra, right? Did we understand that? About currencies, yes, it applies, right? But currencies, you have to understand that there is fundamentals, Miss Diana. I just took time to look at the chart. Did we understand the last concept that I said? Right. Cool, guys. Cool, guys. Now, if we have any questions, please wait. Please wait. If you have any questions, then the last thing that I want to talk about now, I've spoken about the TDI. I've spoken about price action, how the M, I mean the price action, I'm talking about where the M is, which is the point of liquidity, yesterday high and yesterday low, and how does the M look like, right? We either have, when I spoke about the types of M's, right? When I spoke about the types of M's, this is when I'm speaking about, when I'm talking about price action. Then I spoke about the TDI when I said shark fin, either shark fin or divergence, right? I've spoken about that. Now, I want to talk the last thing concerning the M's and the W. The last thing concerning the M's and the W. If we have Asian session, you guys, you know your sessions, right? Asian session, then I have London session, then I have New York session. 1. Here I may have Monday. Here I may have Tuesday. Here I may have what? Wednesday. Like this. This is 1 day. These are what? 3 days. So these are 2 different scenarios. If a W or an M let's say an M hits the Asian session, drops, gives another leg on the London session, then drops like this. This is what I call a multi-session M. It's a valid, 100% valid, right? If my first leg of a W is maybe on London, then rise, then the second leg maybe on the New York session, then rise. This is a multi-session W. It's 100% valid. Did we understand that? Yes, these sessions are for currencies. These sessions are for currencies, but you have to know this information. That's why I did this. These sessions are for currencies, yes. Right, let's go on to the next thing. If the first leg of the M may be on the other day, then drops, then gives you the second leg on another day, right, like this, then the market may look forward to drop like this. This is what we call the multi-day M. This is what we call the multi-day M. The same applies to the W, right? This is a multi-day W. When you have the first leg another day, and you may have the second leg the other day. This is what we call a multi-day M or W. Did we understand that, guys? We understand that, right? So just a quick overview before we call it a day, before we end the meeting, just a quick overview. Price drops, price rises. Price drops, I'm looking at buying the market, then it rises. I'm simply looking for the last bullish candle responsible for this drop here. As soon as price breaks that, I take position of buy right here. I put my take profit at high of the day right there, and I put my stop loss where at this point here. Simple, guys. The same applies in a selling setup. The same applies in a selling setup. I'm simply price drops, price rises, price drops, price rises, then price drops, right? If I am to take a sell for this setup, I am looking for the last bearish candle responsible for this rising. The last bearish candle responsible for this rising, if in this case maybe right here, right? It may be right here. Then it drops. As soon as price breaks this, I'm looking at buying. Where is my buy? As soon as price breaks this zone. Where is my take profit? It's low of day. Somewhere right there. And where is my stop loss? It's the lows. Agreed, guys? Did we agree with that, guys? Let's check the chat. If we have any questions, I'm just gonna give room for maybe 2-3 questions. 2-3 questions. First question. If we are using M15 to trade, either the M and W, which of the higher time frame do we confirm with it? Yeah, when you are trading, you need to do top-down analysis. You need to do top-down analysis. Right, you visit your daily, you look at the trend, you visit your H4, but mostly if you're trading on 15 minutes, it's important for you to look at the H4. It's important for you to look at the H4, the daily, the H4, yes. Yeah, I think I've also answered this question, which asks for the time frame, right? What about the M and W? Okay, another question from Mr. Lawrence says, what about the M or W that are formed on daily time frame. If this happens, this has to happen always. It always happens like this. Either it's happening on daily, on H4 or whatever, it happens like this. But I personally take trades on 15 minutes because I'm also considering my account size, my risk and reward. Because if I tell you to put stop loss at lows, would you put your stop loss right here on a monthly or on a weekly or on a daily time frame? Right here, your stop loss. This may be too far, right? If it gets hit, then it means you have lost a lot of money. That's why I prefer to do it on 15 minutes. I'm sure that is properly answered. To monitor my trades, I use the TDI. To monitor my trades, I use the TDI, the daily highs and lows, the points of liquidity, and the moving averages. If the W or M does not touch HOD or LOD and the TDI doesn't give divergence or shark fin, I won't trade. Yes, Mr. Emmanuel, I will not trade exactly. Yes, it happens also on boom and on crash. Co-host, can you please look at the questions on YouTube? Can I please see YouTube? Just gonna pick a few questions from the YouTube. Do I have any questions from YouTube? Do I have any questions from YouTube? Wait. Yeah, on YouTube, which session does this setup likely to happen and how can you confirm it? Normally it happens on the London session. London session is really powerful. London session is really powerful. Then the other question on YouTube says, how do you filter the fake and less powerful divergence from the real powerful one? I mean, divergence occur on the TDI and only one candle moves in the direction of the divergence of the price. Yeah. How do you filter the fake and less powerful divergence? And only one candle moves in the direction of the divergence. I don't understand the question. I'm kind of, yeah. How do you filter the fake and less? Oh, okay. I get it. You are trying to ask me how can I tell whether this divergence is powerful or is less powerful? Okay, for divergence, right? What I know about divergence is price normally follows now where the indicator is going. Right, price will normally follow where the indicator is going because it has a lot to do with price, volume, and stop and points of liquidity. So I think I will have to do another session clearly explaining the TDI. It's another thing, right? Right. Any other last question, guys, before you can close it? How do you mark LOD and HOD? I'm gonna give you guys the template. I'm gonna give you guys the template. The indicator for LOD and HOD on the chart, easy. Okay, so if we are partially done, guys, we can call it a day. If you're watching from YouTube, please make time to click on the subscribe button and turn the notifications on because we normally post educational content all the time. And thank you so much, guys, for the support that you have shown to the group for the past few months that we have been operating in the market. And thank you so much for each and every compassion that you guys show to the group. Thank you so much. And without you guys, this wouldn't have been possible. And I will forever be grateful because our growth depends on you guys. Our growth depends 100% on you guys. That's why we had to host the Crown Funds. This meeting has been recorded. If you have any difficulties whatsoever, you can revisit YouTube. We are going to edit it a little bit so that then we will post it on YouTube. We are also going to give you guys the private link to this video. That is if you want to download it also. So with that being said, let's call it a session, and I'm closing, guys. $100%, guys. 100%, guys. I'm actually looking at the chat and I see you guys. 100%, guys. 100%. So with that being said, guys, please hit on the subscribe and peace, guys. I'm out. Stop recording. Yes.